Okay, once again, we are on the Thinkorswim platform. It's still Feb 25th. The market's not opened. It's 8:30 a.m. And what I'm going to do is how you would look at futures is, first of all, anything with this slash GC slash NQ, these are all futures. Slash ES is a future. So the symbol all of the future, most of them at least, all start with a slash. And so let's go ahead and go over to the Analyze tab, and these are all the futures that trades. So futures are slightly different. They have something called a tick size and a tick value. So for example, let's go take the ES. So as you can see this morning, the ES has been going up. It's pulled back a little bit. And this is, of course, telling you what the volumes are. Now, what we want to do is look at the futures contracts of the ES itself. So here we are. Let's go into active trader. And once you do active trader, this is what we would call a ladder. It's right now, the futures are at 1932.75. On the left side, these are all green. If you wanted to buy it at a certain level, you would enter your order here. If you wanted to sell a future, you would enter a order here. This is a time and sales, which is also available on most platforms. It tells you at 8:35:29 who all are trading. Now, certainly this 8:35, you can see somebody just traded 55 contracts. Now, so this is definitely smart money because here we are putting in $500,000 worth of margin straight into that one trade. And here is 65 contracts. Mostly all the ones and twos are where the retail investors would be playing. And then if you see anything above, I would say 25 to 50, definitely those are the smart money. Here's 50 contracts right here. In fact, what you can do also is come here and say, only give me contracts that are minimum of 25. So because this thing just goes very quickly otherwise, and especially when the markets open, you'll see that the futures ladder just goes very, very quickly. So here we are now. Numbers in green are when the trade happens at the bid price, and the numbers in red are when the trade happens in the ask price or the offer price. So it doesn't mean that it's down or up. It just tells you which side of the bid ask spread it was traded at. So now here looks like S&P then just came down over the past 1 hour. It's trying to rebound here. So if you wanted to, let's say, buy an S&P contract right here, so it's trading right here at 1931.25. You can put buy one and boom, actually you see we were too late. It went up there. So now I can move my order there and see if it gets executed. It's not, but it's a very easy way of putting your trade because all you need to do is work this ladder. So for example, I can say buy at the market one contract and it'll send it. So I bought one contract. So, here, if you look at the futures position, so I have one contract. I bought it at 1932.75. And right now it has a profit of 12.50. Each tick size is going to be 1250 on the S&P. You can see that that's what it is. I also can add some more and I can say buy market. And here, let's look at this contract a little bit. They are taking 5225. This is your initial margin per contract. Now, if it starts going against you, they'll ask for maintenance margin. So you have to think of how much capital you want to allocate to this. So now here, let's see what our position is. It's one contract. We are down 25 bucks. So here you can see our position is right here at the 1932.75. The S&P is trading right here. And if you look at the left side, you'll see some numbers. These are the volume of contracts that are traded at these price levels. So it looks like the maximum was 1412, which was traded at the 1931.50 level. So it just gives you an idea of where some of the larger volume action has happened. So as you can see, if it goes up, you'll make money. If it goes down, you'll lose money. So it's a purely speculative investment. And because of the leverage, you want to be careful that you watch the position if you're doing it. If you're hedging it because you have a portfolio and you're worried about that, that's fine. But if you're just speculating with this, you have to watch out for it. The great thing I like about the futures is it's so simple to get in and get out. So, here we are. I'm losing about 75 bucks. Let's say I wanted to double down. All I need to do is say buy at the market level, and boom, it's done. So this ladder is very good for that purpose, and it will immediately buy or sell your position. So this is how futures works. You have futures, as I said, for currencies. So let's go to 6E. This is a euro, and that one is trading right here at 1.10215. Okay, so that's up to 5 decimals. And so if you wanted to sell one right there, you can sell it. Okay, sold a euro future also on the 6E. I have a buying power effect of 3,900. So it's holding about $4,000. And then on the ES, because I have 2 contracts, there is a initial margin of 10,500. And our position, the euro, I'm short 1 contract. And on the S&P, I'm long 2 contracts. So let's leave these orders as is and we can track them. Thanks.